What is going on, everybody, and welcome to another weekly updates. And what I'd like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide a technical analysis on Sundays. And you can also check me out on X at Hemi137, as I do provide a daily pulse on the market there as well. Now, let's get a quick recap of the past week. There's a lot of things that are occurring. I've talked about this kind of last week, that you're getting in this dead period between now and essentially the non-farms, which is on this Friday. Ultimately, you have to understand that between this period, there really is nothing else going on other than headline news. There's nothing major scheduled. Yes, we did get some information on Friday, essentially with the concerns that people aren't believing the Fed, and that people think inflation is going to get much worse just because of all the tariff talks. We don't really see that just yet, if that's true or not. Again, the way Trump is trying to approach this is trying to balance it, in a sense that he's trying to reduce taxes while placing hefty tariffs on other countries, or renegotiating a lot of these tariffs to make it more beneficial for the United States, as we've essentially been handed some trash for quite a few years. And so he's just trying to change that. But with that being said, again, coming in this week, we didn't have really anything major scheduled. We had some things. We had the GDP. We had the core PCE. Core PCE came in a little bit hotter, but again, ultimately, it was a forward projections, or the Michigan consumer sentiment ultimately is what the market started kind of really panicking, because it's people are thinking that there's going to be inflation is going to start coming back, because essentially everything that they've heard about tariffs at this point. We'll see if that's true or not. True inflation here is posted at 1.75, so it's come way, way down from what it was. We'll see if the next core inflation starts showing signs of deflation. If it starts showing massive signs of deflation, that means the Fed are going to have to really do something, because the unemployment will be out of control. So that's ultimately what we're really looking at there. So if it does gap down and we start hitting 1.75, the Fed are going to have to do something, because unemployment, again, like I said, we have 2 million ghost jobs. The Fed even pointed this out last year, that the job numbers seem very skewed. I remember when Powell did say that, but yet nothing really happened at that point. The market didn't really care. Again, when everything is covered up, which a lot more essentially delinquencies on mortgages have been covered up for quite a while. Again, we've been in a housing crash. You've been in a banking crisis for 2 years. So despite what you're seeing, it's not being essentially displayed to you. It's all being filtered out. And yet you are continuing to pay higher taxes and continuing to deal with inflation. But now some of that stuff, so you should start seeing some relief of that with all the massive layoffs within interest rates. Even though we've cut back in the beginning or towards the end of last year, inflation was still high, and it was still digging at people's essentially savings accounts. And it was so bad that a lot of adult parents have moved in with their parents. And even so, that essentially the biggest working class in history has essentially now been giving inheritance early, so people don't have to get home loans from banks and try to go out and purchase their own home, because again, it is a very difficult situation to be in currently right now. So with that said, the Doge clock is still pointing at $256 billion is what they're claiming right now, which is good to see. They're still aiming for, I think, about $1 trillion towards the end of the year. We'll see. It's only been a couple months. They've done some great work. I don't know how again, true that is. If that number is at all true, you're going to start seeing some massive disinflation, because spending is a huge part of that. And if what we've seen from Javier Milei, when he started rapidly cutting just essentially the spending from the government, we saw their crazy amount of inflation get chopped down to normal levels of inflation with what seemed only a matter of a couple months. And that is ultimately what we're looking at. I think in the short term, you're getting a lot of fear out of tariffs, but what you don't understand is all the cuts that have been occurring in the need of spending for illegal immigrants, that I think have drawn up the price of coffee, orange juice, and eggs. I think that's also part of the massive disease that was spread through the chickens that they had to correct there for a little bit. But ultimately, I think because of that, you're seeing eggs and milk and everything else in orange juice and coffee fall off the cliff at this point. So with all the massive deportation and the massive needless spending, you might see massive deflation. And then what is the market going to do? So this anticipation of tariffs, it's all anticipation because of the uncertainty. It has nothing to do with what is actually occurring. We don't know what inflation is going to look like. It could be a little bit higher. We don't know. But again, you have to ultimately understand in the long run, it's better for the United States to be producing in-house. And that's what he is trying to do. And now it seems like this weekend, I know Vice President Vance is out in Greenland. They're pushing very heavily to get Greenland because of the resources that they can essentially help populate the United States. It also gives a very strategical advantage for anywhere around the whole Europe. And ultimately understand that, again, we could really use those resources that are in Greenland, and also why the United States is going for Canada as well, because of the massive amount of resources there as well. But being said, we're not here to debate about all that, but we're ultimately trying to see what's really going on there. Because again, if they do become states, that gives U.S. some major leverage in the whole discussion about resources. So with that being said, the State Department is officially shutting down U.S. aid. Speaking of fraud, waste, and abuse, the massive amount of waste that's been shown in U.S. aid. So officially, I think it was on Friday that was officially announced that they are officially shutting them down. I think there's only 900 employees left by the time DOGE had gone through everything. And they've pretty much said they're just going to close the whole thing down. It's all just fraud and waste, and there's no actual efficiency or anything going on with U.S. aid. So that's not saying all of them are. Again, that's more so, again, just pointing out some of the spending, the massive budgets that are being cut. So even though it doesn't seem like a lot for that of the debt we're going to take the whole debt situation in talk. You have to understand too, they can reevaluate the price of gold, which they haven't done in a very long time, which could essentially almost magically create more money for the United States, depending on how hard essentially Trump wants to push this. It could essentially almost get us out of debt. If for some reason gold gets reevaluated to what it is now, which is a couple $1,000s, and then if for some reason it gets pushed up, if it starts short squeezing because of that and pushes up to say 8K, then the U.S. can reevaluate gold at 8K. If it keeps short squeezing, because gold is one of those precious metals have been short squeezed so bad as of late. It's one of the biggest manipulated markets in the world. That it could short squeeze. What if it short squeezes all the way up to 20K for gold? And guess what? We're almost out of debt, and that is just what they quote unquote call an accounting fix. Essentially, is what that would be. So that is a possibility, and I know that's why the whole discussion about Fort Knox and everything has been in the headline news because of the potential reevaluation of gold, and understand that could again create essentially money out of nowhere. And so that is what they're looking at, because gold's hitting all-time high of $3,100. So I think gold is only priced in at like 75. I think it's around $75. So a reevaluation of the actual current gold around the globe would give us a tremendous amount of money. I think it would almost give us $1 trillion. So it would give us like 780 billion if it's just evaluated to the point it is now. So they can do it just to evaluate it to the current levels, which would again almost create $1 trillion out of thin air. And then they could use that to do whatever they need to do. So there are moves that are being made that I think are way beyond how we are interpreting it as of right now, because they're much longer plays. They're not immediate changes. All we see is, they're just cutting a bunch of innocent people. Yeah, that's true in some extent, but you have to understand the overall branch that's been created is fraudulent and wasteful. It's not saying that the individuals are. It's saying that the heads of those departments are up to no good, and there's some of that money funnels into good stuff, but the majority of it does not, and that's what they've found out. And so that's why they're removing it. Again, they're giving people 8 months of severance packages and allowing them to go find new jobs. So in 8 months, hopefully this whole thing can flip, and they will have good, solid jobs. And that's what we're trying to do. So you have to understand there will be a lot of short-term pain, and this is normal for any early transition. So you do need to understand that. But again, I don't love all the actions that are taken in the administration, not making this political, just trying to take this on a economic perspective and how it's going to affect the market. Now, the market obviously doesn't like what's been going on because, again, whenever there's uncertainty, the market is fearful. And so that's what you're seeing as of right now. And then, like I said, you had the on Tuesday, we did have, I think it was on Tuesday or Wednesday of this week, we had Trump announce the 25% auto tariffs. So essentially any vehicle that's been importing parts or vehicles, whatever the case is, they're going to get hit with that 25% auto tariffs. And essentially the only company that is like 100% in the United States is Tesla. And so you can say what you want, but we're trying to bring, again, all the production back to the United States so we can create more jobs. This is what we're trying to understand. So being said, that takes time. You need to threaten other countries. You need to put things in a better circumstance for the United States, because we've gone many, many decades where countries are just taking advantage of us. And China shouldn't be the superpower it is now without our assistance. And so the fact that now they're wanting to wage wars with us and everything else, and you have to understand that they came. If it wasn't for us, who knows where they would be at this point. So. But again, there's always fraud, manipulation, and everything else in between. So, but with that being said, we'll have a big week this week. We have Liberation Day on Tuesday. So there's supposed to be a lot of tariffs announced. There has also been rumor that a lot of these tariffs that people are afraid of, which might have been the reason why we sold on Friday as well, not just because of the worries and concerns about inflation, but more so the fact that if some of these tariffs hit, it could cause more inflation. Ultimately, understand though too, at the same token, we don't know if that's true or not. But the rumors are saying that this just may be more of a fear tactic as opposed to actually more tariffs. And so it might be a fear tactic to draw down the market more. And then come Tuesday, he's like, yeah, there's nothing really going on. Maybe something really small, and that's it. We don't know. But there's been rumor floating around that could be the possibility. If that's the case, the market might rip. You have to look at the market right now. The only stocks or industries that have been doing good is the Mag 7, obviously have been holding up the market for the past year and a half. That's all we've been talking about. And the banks. The Mag 7 have taken massive hits over the past 3 to 4 weeks at this point. A lot of them have corrected anywhere between 20% to about 60%. Tesla being probably one of the hardest hitting ones of those, because the actions of Elon have obviously translated to the stock as well, because they've been in headline news of the cars blowing up and everything else. But nonetheless, that all can change. And Tesla started recovering, and there's a lot of talk. If you follow Tom Lee, he's been talking about Tesla. Tesla's going to lead us the way out because of FSD. Yeah, Tesla's FSD is getting approval across the country. Their energy efficiency storage is much, much needed for our current energy infrastructure that could, again, make it more efficient and hold during, certain energy spikes within the grid. The Tesla storage can capture those energy spikes and use it during the nighttime, typically when you need that energy more, and then make it, again, more efficient throughout our daily lives. And so that energy storage has been growing rapidly. And then you're not even talking about humanoids. Humanoids is slowly creeping in. They're slowly conditioning our environment that is the next wave. Now, it will take some time, but just like AI took off, right? AI infrastructure took off, chips took off, and then you don't have any fantastic use cases of AI. People just said they had AI integrated. People are realizing that, hey, AI isn't the greatest, but it is what it is. And it's quantum computing. Quantum computing is still years away to be super efficient. They're starting to build a lot of that stuff out now. because you're not only going to need quantum computing, you're going to need also some sort of defensive strategy for your networks to be able to protect against those kinds of things. So yes, it's nuanced, but again, your use cases aren't solid till a couple of years from now. Your AI use cases, there's some really good use cases, there's some not so good use cases that are currently occurring, and people are starting to realize that. And then your next wave will be robotics. Robotics is, Boston Dynamics has probably one of the best, but also the most expensive models out there. And, we're going to be able to afford $1 billion robots, but you got someone like Tesla that can make it more. They're much more efficient, and they innovate rapidly and make things cheaper rapidly. And Tesla's probably the best at that than I've seen anybody do that. And then you start bringing humanoids into it, and they do everything in house, so you don't have any red tape. They can do a lot of things that a lot of companies just can't do, because a lot of essentially the AI components need to match up with robotics, and hopefully nothing goes bad there, or else you're not going to have the brains with the body type of thing, right? So there's just a lot going on in that space, and it's accelerating, and it's becoming more frequent. Before you know it, that will be the next wave. So, but I kind of went on a tangent there. But Liberation Day, again, tariffs, there may be nothing, and if that's the case, the market might ripping after that. So Tuesday will be a big day. And then Friday, obviously, without saying much, non-farms, obviously, another really, really big event that we've been talking about is that non-farms are going to play a big aspect of what's going on, because if we start getting massive unemployment over 5%, the Fed are going to have to do something. The Fed are going to have to cut. And Powell's already hinted that they're going to start quantitative easing, which means the printer is going to come on, which means before all that happens, you're going to need an event. You're going to have to start cutting. Maybe they know what the next jobs report is. Maybe they know the next inflation report is going to be massive deflationary because of true inflation. And then they understand, what's the next step? How is unemployment looking? Oh, well, there's been over 2 million ghost jobs for the past 2 years. Our environment is not very healthy at all. So maybe we should start cutting rates, because, again, a lot of these companies, their loans are coming to maturity. They need to refinance the loans. Our debt needs to be refinanced as well. We need a major event to occur, and that needs to change rapidly. So whatever that is, and maybe Trump is using the tariffs to start forcing the Fed to start cutting, to threaten the market, to bring down the market for whatever case, and worry of inflation. The Fed really aren't going to start cutting rates if they're worried about inflation. But again, if you have a massive deflationary reading, well, then that just leads to the next case. If you have a massive deflationary reading, you have a massive uptick in unemployment, which I'm sure is well over 5% at this point, then they're going to have no choice but to cut. We talked about 2007 going to 2008. We kind of played in that scenario. But on the same token, I've been reflecting a lot back on 2022. And we've talked about this, about how things were really, really bad at that point. You had tech bottoming out, Tesla at 100, Meta at 80. You had a lot of major problems in the environment. And now the only thing that's kind of prolonged this whole situation to where it is at this point is now you have buy now, pay later. Now you can finance your food. You have a lot of different ways. You've had the FHA that have been bailing people out for 2 years on paying mortgages. So why would you move when essentially the government is paying for your mortgage, right? And then you have all these massive spending for illegals, and all these programs that are just extremely fraudulent and wasting billions and billions of dollars for things that aren't needed. When you got bridges and roads that are collapsing, that none of that stuff's being patched. And so we needed to focus on America, make America first again. And so that's what you're kind of seeing there. So we'll see. But this week is big, and they're pricing in the end of the world again this week. They're pricing in 140 points this week, which is massive, because again, on average is only 60 points. So, but our next monetary policy isn't until May 7th. So we got quite a while before our next scheduled monetary policy. It's not saying if some major event occurs here in April. April's got some big events in it, that the Fed won't come on an emergency rate cut. It's very much a possibility. You need to understand that. April 10th will be our next core inflation. That's going to be very big. So after this week, we got a big core inflation report. And then next earnings cycle starts on the 15th. We'll start adding that probably next weekend. I'll start listing the upcoming earnings again. We'll start going over the calendars again because that's going to be extremely important, and reading on how that's going to be laid out. Again, earnings have been horribly bad aside from the banks. Everybody's been getting quantitative easing but the U.S. taxpayer, and hopefully the administration's trying to change that so even the taxpayer gets some quantitative easing, because again, it's unsustainable. But like I've stated, SPX is pricing in about 144 points. Tesla's very high at 27 points. Boeing is still high. Again, Boeing doesn't move much, but the fact it's up at 8 is quite dramatic. It's normally around 6 or 7, I believe. I think it was normally around 6, and then it kind of started averaging around 7. Now it's flopping 8. JP Morgan is very, very high. It's typically around like 4, maybe 5 during the earnings, and now it's up at 9. So they're expecting a lot to happen with Liberation Day and unemployment this week. So get ready and buckle up, because again, it's going to be a very, very crazy week. And I think over the next several weeks with Liberation Day, unemployment, core inflation, and then all your earnings, you got bank earnings. Banks are still dealing with issues because of interest rates being high. The Fed are aware of what's going on because there's been more bank closures. It seems like every couple months there are hundreds and hundreds of bank closures that are continuing to go on. Hundreds of companies are going bankrupt and still cutting, even though despite there are skeleton crews. You've been massively cutting over the past 2 years. Even the mega tech corporations are still cutting, right? They can't hold on to people because everything is still too expensive. And understand that it's not just the inflation anymore. Now it's, the loan's coming to maturity. We can't pay these new loans or get new business loans because, again, the loans are too high for us to do that, and something has to give. And so you got to continue to cut the best you can and close down any future development, and you're just in survival mode, and that's what you're seeing at this point. So I do, again, believe we're very close to a very big pivot point. You need to be taking positions, in my opinion. I think we can sell a little bit more in some industries. Again, most of the industries haven't recovered since 2022. You have to reflect on that. So again, we will wait and we'll see, but I'm excited about what's to come. You have to take it in that perspective. If you're going to be in these markets, it's not pretty. To know what you're really betting on is people's livelihoods that are getting destroyed from this economy. But ultimately, again, understand that that's not why you're in this environment. You're in this environment to improve yourself, to improve your families. And so you got to be neutral. You can't be overly biased from one side to the next. If you get a 40, 50, 60% discount, why would you not take positions on those stocks? Yes, it can go down a little bit, but again, the problem is what you're facing is a very quick recovery. And I think we've come into this environment where the market recovers a lot quicker than it once did, and it has a lot better control over the way things happen with short selling and everything else at this point. So to see massive, massive declines, you're asking for a complete collapse of the financial system, which to an extent, yeah, that would be great to restart. But on the same token, you have to ultimately understand what comes with that as well, and the massive amount of chaos, because this is why there is a utopic narrative out there, because if there isn't a utopic narrative, people panic. And when you have mass panic, there is no control. And so with all that being said, have a great day, and I will see you guys on the field.